And we're back for the final part of the show. My name is Ndoro Ganga, again standing in for Simba Elijah Charles Kiage. Now, Kenya Power has posted the first loss in 17 years, turning the spotlight on the push by the utility firm to raise retail tariffs for homes and businesses to improve its performance. The Treasury's disclosure to Parliament shows the electricity monopoly returned a net loss of 2.98 billion in the financial year ended June 2020. But Kenya Power, which is listed on the Nairobi Bourse, is yet to make public its financial statement for the year to June. This offers investors a clearer picture on the performance of the utility, which in June issued its third profit warning in a row. Let's look at the data now. The firm cited reduced electricity consumption due to coronavirus control measures and the rising cost of buying wholesale power from firms like Kenyans. So let's put this into context. George, let me begin with you. What is your reading into Kenya Power issuing a profit warning for the third consecutive time?
I think Noreen, Kenya Power has to put the act together before things go from bad to worse. If you look at their 2018, 2019, now 2020 figures, then it points to a company that is having dwindling fortunes. And remember, Kenya Power is a monopoly in their field, and therefore there is no reason why they should return losses. In 2018, let me just give you an example. In 2018, Kenya Power returned an operating profit of let me start with the revenues. They returned a revenue of 95 billion, and then 2019 the revenues were 112 billion. And then when you go to their profit, that is their gross profit, they did 84 million in 2018, and then 90 million in 2019. And then when you go to their profit for the year, that is profit after tax, they did 3 billion in 2018 and just 261 million in 2019. There is something fundamentally wrong with the maths at KPLC. And one of the reasons is the COVID is just I think one of the smallest aspects in why the numbers are not adding up. But the major reason is that the cost of finance is increasing year on year, year in, year out. If you look at their balance sheet and look at their borrowings, they had 111 billion in 2017, they had 96 billion in 2018, and then 92 billion in 2019. And then if you look at their cost of borrowing, that is for 2018-2019, they moved from 7 billion in 2018 to 10 billion in 2019, which I suspect has gone even higher this year. And most of their loans are dollar denominated, and with the fluctuations in the FX rate between Kenya shillings and dollar, that explains why the cost of borrowing is increasing year in, year out. How were these loans negotiated when they were starting this process? And then the other aspect is the cost of financing Lake Turkana wind power. In 2018, the reason why they reported a bigger profit as compared to 2020 is that in 2018 they didn't pay any cost of power for Turkana wind power project. But come 2019, they paid 11 billion for that project. That project has not plugged into the national grid, meaning we are paying for a project that is not generating any revenue to the economy. That explains to you why they reported a 3 billion profit 2018, a 261 million profit 2019, and now a 2.98 billion loss in 2019. They have mentioned that they want to increase power cost. I think that is prescribing a painkiller for a tumor. That will not solve the woes at Kenya Power. They need to relook at their business model. One is the borrowing, and then the cost they pay for generating power before they come to the final bit. That's the cost of power that they charge to the consumer. So I think that the strategy team and their finance team must sit back and look at some of these aspects: the finance costs and the cost of the cost that they pay to evacuate power from the power generators eventually to the consumer.
Kazuto, let me come to you. From everything that George has said, these are all red flags that have been going on for 3 years. Any business you give profit warnings for the first time, everybody goes back to the drawing board. What would you say the problem is? Is it just a case of impunity where nobody is holding you to account, coupled with monopoly in the market? How would you say this can go on for so long and nobody is trying to clip the horns of the problem?
I think it is key to understand how the energy sector works in Kenya. It is normally divided into three, where you have Kenyan, who deals with generating of power. You have KRA or something of that nature that deals with infrastructure, and Kenya Power that deals with transmission and distribution. The way these three are related, you see Kenya Power gets power from Kenyan and other power suppliers based on purchasing power agreements negotiated by the ministry and not by themselves. And the purchasing power agreements say that you buy whatever is generated. Yeah? So if Kenyan generates 2,000 megawatts and Kenya Power only needs 1,500, they will still pay for the additional 500 megawatts, which they are not able to sell because there's no demand. So I think Kenya Power, for us to look at them to be profitable, because they still have to maintain the distribution and the transmission infrastructure. They have to upgrade that to, one, reduce the average loss that happens during transmission and distribution is around 18%. For them to do that, they have to borrow because their revenues, as much as they are 100 and something billion, if you look at the capex that they spend, their capex is more than that, just to upgrade a substation, upgrade generators and all. So what faces Kenya Power? Again, Kenya Power is a symptom. It's a symptom of what? It's a symptom of a failing economy. If you cannot increase demand for electricity, then Kenya Power is not going to be super profitable anytime soon, because you have good capacity, but you just don't have demand for electricity. Demand for electricity comes from houses using electricity and using appliances. And the demand for appliances increases when your income increases. When your income increases, you think, now I can afford a microwave. Now I can afford a washing machine. Now I can afford this and that. And as the economy is growing, you realize production in manufacturing also starts growing. Our manufacturing as a percentage of GDP has dropped in the last, what should I say, in the Jubilee regime from around 11% to now down to 7%, and we are looking like we're going to 6%. And as long as you're not growing your manufacturing, you're not going to have demand for electricity. We don't have a mining sector. So our individuals, our households, and our manufacturing sector need to up their demand. If you look at the electricity consumption per kilowatt per capita, Kenya is at around 175 compared to South Africa, which is at 3,422. Even Zimbabwe is a higher per capita consumption of electricity per kilowatt than Kenya. That just shows you the level of demand on electricity in the country is so low for it to make sense for Kenya Power. And that's why they come out saying that they need to increase electricity prices so that they can try and cover the cost of buying from Kenya, and which is a price which is non-negotiable. Yeah, as in the price is set. No matter what is happening on the distribution and transmission side, they have to buy it exactly at that same price. If you then look at our commercial sector, commercial energy supply, 75% of it is from petroleum. People use their own diesel or electricity or petrol powered generators. Only 25% actually use Kenya Power. Then, therefore, that also reduces the demand. So Kenya Power faces a big problem of electricity demand. Nonetheless, if you then go to their numbers, if you look at the balance sheet that George mentioned, their debt is also worrying vis-a-vis the revenues that they generate. Currently, I can say Kenya Power is insolvent because they have a negative working capital position. They have current assets of 44 billion as of 2019, and they have current liabilities of 115 billion. So if all your current assets, which are current, they are due in that year, are supposed to be paid in that year of 115 billion, you only have current assets worth 44. That means they will not be able to pay the remaining 54 billion. So in all intents and purposes, they have a going concern problem, and which their auditors have raised. And just to mention what George mentioned on the difference in their net profit between 2018 and 2019, because of what they find themselves in, they try to now use creative accounting. So, for example, fuel charge, which they're supposed to bill in the subsequent month, in 2018, they billed it in the exact same month. So they overstated their revenue by 7 billion. That's how they were able to make that 3 billion. And the auditor raised it to the Office of Auditor General that has to be reversed because it is not proper. So they are in a crisis. They are insolvent. And a government needs to take a position of, do you want Kenya Power to be profitable, or do you want to grow and make them be able to distribute more power at a cheaper cost, get more people on the grid, more people using electricity and the benefits of it, and just say we will bear the loss of Kenya Power. But you cannot have it both ways. You cannot have cheap electricity and expect Kenya Power to be profitable.
Great. George, let me play devil's advocate with what Sh.200 has said. He says there's sort of some oversupply of electricity in the country because the economy is not consuming as much as is being produced. But one might argue the reason why people are not consuming electricity as much as they should is because of the cost. Now, if you compare, he said, big industries like mining, manufacturing, people prefer to set shop in other countries where the cost of electricity, among other things, will be cheaper for their business, for them to be profitable. Talk to us about that.
I think I agree with Sh.200 that initially the government's policy, that is beginning 2013, 2014, 2015, was to increase capacity in terms of electric generation. That is where we had GDC coming in, we had the Electrocana wind power coming in, and we had Kenyans also coming in to just build their capacity. Government addressed one side of the business model, that is the supply side, without addressing the demand side. And they invested quite heavily on the supply side. And Noreen, let me just put it across this way, that some of these projects were overpriced. If you look at Electrocana, the total project cost of Electrocana project, then look at it vis-a-vis the generation capacity, then you can clearly see that some of these projects are overpriced. But the way some of these contracts are negotiated, it is such a way that Kenya Power has to pay for all the power generated within that project, even if it doesn't sell that power. So we are shifting the losses that were supposed to be made by the generators now to the distributor of this power. Being that all of them are government agencies, then the government can come in and just look at how they can spur power consumption, not only in the economy, but in economies that are neighboring us. I think I read previously that Treasury were negotiating with Ethiopia, they're negotiating with Uganda and even South Sudan to be able to export this power to them. But this brings me back now to the cost of this power. Are these economies going to accept that power at the cost that we are selling this power to them? That is the other issue that we need to address. So the onus is on the players in that sector to try and review the cost that they are selling this power, not only to Kenya Power, but also to the economies that they want to export this power to. And that brings me back to the contract that they have negotiated now with the generators of this power. How are those contracts done? Can those contracts be reviewed so that it makes economic sense for any manufacturer in Ethiopia, for any manufacturer in Uganda to purchase power from Kenya? If that is not done, then we'll have what we call idle capacity in Kenya in terms of power generation. So I think what Kenya Power is proposing, that they want to increase the cost of power, is not going to solve the problem. Because one of the reasons why most manufacturing institutions are moving from Kenya to other economies is because of cost of power. So if you increase that cost, then what you're simply telling them is that they'll abandon you here with capacity that you already built and move to other economies where they can access cheaper power. So I think government must come up with a way to address the cost of power before they start thinking of even increasing the cost. I think that is the last thing that they should think of, Noreen.
Sh.200, very briefly, George has tackled why increasing of cost is not a good thing, but there's some logic behind Kenya Power saying they will increase cost by a fifth. What role will this increase play in sort of solidifying the financial foundation of KPLC?
Them increasing the cost of power will just help them pay their debt. In very brief, if they continue running losses, And one thing we need to know, the debt of Kenya Power is guaranteed by the government. So this 156 non-current debt that they have sits on the national debt. If Kenya Power cannot pay it, the government, or should I say the taxpayers, we are going to pay that debt. So if they don't increase the cost of power, as I said earlier, the government needs to make a decision. You either bring all these three players together under an umbrella body and report performance under that umbrella body, then you can mask the losses of Kenya Power due to policies of one either trying to make electricity cheaper in the country. The same way they're trying to do with aviation, where you're bringing the airport and everything under together to try and boost one of the players or make sure that that sector is profitable. But if Kenya Power does not get the 20% increase that they are looking for, the loss for 2021 will even be way bigger.
Okay, now we have time for just one more thing, and that's wealthy Kenyans are blocking KRA from 200 billion tax collection. Now, wealthy Kenyans and firms have denied KRA more than 200 billion after challenging demands for tax payment through appeal tribunals. Now, KRA Commissioner General Githimburu reckons that the authority has witnessed a surge in taxpayers challenging notices for unpaid duty at the Tax Appeal Tribunal, TAT. This has stalled enforcement actions like asset freeze, deactivation of personal identification numbers, that spins, travel bans, and prosecution that ultimately led to payment of unpaid taxes. George, what is the danger of having wealthy people, or rather tax cheats, challenge the fact that they're supposed to be paying taxes? And we know the judicial process stalls in the country. It will go for 8 years, 9 years. What danger does this pose to the economy and in the short term to our national budgets?
Let me make this point first before even I comment, that for any economy to grow, its citizens must be able to pay their fair share of taxes to the government. And I must emphasize the term fair share, meaning if I'm earning 100,000 and somebody is earning 10,000, we have to have an equitable tax system where I pay my contribution as to my income to the government. So that is one. Two, Kenya Revenue Authority has missed its tax budget year in, year out, I think from 2016, 17, 18, and even 19. And the reason for this is that most companies or most citizens in Kenya don't see the reason or a compelling reason to pay their taxes. One, because of corruption allegations or corruption cases that we have, additional corruption cases that we've had in the country for quite some time now. You see, for every corruption case, there is a tax revenue that is lost in between. And then two, our tax systems are not simple, and they're not encouraging enough for taxpayers to volunteer to go and pay their taxes. When the new Commissioner General came into office, I think his style has been a more of aggressive approach rather than to entice the taxpayer to come on board and pay their taxes. I want to compare this with the period between 2002 to 2007, where citizens volunteered to go and pay their taxes to the Kenya Revenue Authority. Actually, there were very heavy lines at KRA of people queuing to go and make their small contribution to the taxman. So I think for me, the taxman must change tact. One, they must give us a prelude of the benefits that we derive from paying our taxes diligently. And we must be able to see this, that if I pay my 10,000 tax today, I can see the results of that money that I paid. And that the government can only do if it curbs corruption cases to the bare minimum and be able to spur economic growth. Two, when I come to what we call the high net worth individuals, they need a lot of tax to bring these personalities to the tax bracket. The way you do that is by enticing them to get to know their business models. What do they do? And then two, encouraging them that if you pay this amount, then probably you are given what you call an amnesty or another tax measure. You can do that this year, and when they make a payment this year, the next year you remove that amnesty. They'll be able to pay their taxes. Okay. But when you drag these personalities to court, when you drag these personalities to the tax appeals tribunal, then you become what we call a push and pull. And at the end of the day, you end up in courts that take 4, 5, 6 years before a single case is concluded. So I think KRA must change its tact before it can be able to collect taxes from these HNI individuals.
Okay, thank you, George. Kazuto, I only have 30 seconds on the clock. Your parting shot with regards to this story.
I think KRA misses their target here and here, because the policy that is used or the statistics that are used to come up with the target are just, for lack of a better word, foolish statistics. So when you say economy is going to grow by 8%, you're projecting 8% growth, and you also project KRA target based on that. Like for this year, their target was based on projections that were made in February when the budget policy statement were made. And if you then look at income is not growing. Income is growing at a period at a negative 2%. Then you just realize KRA is not going to be able to meet their target. So the idea is, let us give KRA realistic targets based on realistic assumptions, and you'll be able to see them being able to collect those taxes. And finally, if they are not able to get the informal sector on board, then the tax burden remains on the high net worth individuals, and they will always find a way of running away from paying tax.
Reginald Kazuto, economic analyst, and George Munga, managing partner, AMG Kenya. Thank you for making time.
Thank you, Noreen. Thank you.
Great. It's been an absolute pleasure doing this with you from 7 a.m. to 9 a.m. My name is Ndero Ganga. I've been standing in for Simba Elijah Charles Kiage, who's taking a well-deserved break. I'll see you again tomorrow, same place, same time. Until then, enjoy watching Metropole TV.